What's going on, YouTube? This is Dave's Daily Trades, where we bring you daily AMC technical analysis, price predictions, and of course the latest greatest news. In today's video, we're going to be going over a technical analysis for AMC on the 1 minute chart, 1 hour, and 1 day, and of course comparing the beginning of May to present day AMC and the similarities that are playing out. Of course, we will be taking a look at unusual whales, going over the options flow. We'll be going over the debt ceiling debacle that's happening as we speak right now. And then to end it off, we will jump into the Ortex data because things are looking great. But without further ado, we'll roll right into the intro and then hop into the TA. And we're back. All right, guys, we did have a pretty decent day for AMC. All in all, we're up 3.56% on the day. Currently, after hours, sitting at right around down 0.52%, which is nothing crazy. As we always say, do not really worry about after hours. Take it with a grain of salt because a lot of things can change. But all in all, guys, a really solid day. So really what I was watching over all day was this resistance line at $38.90, which is that key level of the Fibonacci retracement at 61.8%. If you guys have been following the channel, this is some areas that we've been calling out for the past couple of weeks now. And of course, the 61.8 level on the Fib retracement scale is a very key area and a key level that we do need to overtake and regain back as a support level to continue our moves to all-time highs and of course that slow and steady grind forward. But for today, just right off out of the gate, we did start very strong, pushing high, and then of course we did have a little bit of shaky action, but around midday today we did hit our high at $38.55. For a majority of the day we did trade sideways right below this level, and this right here is great consolidation to see. This was just about for an hour, hour and a half-ish, which is always great. We can confirm that consolidation down here with the MACD. As you can see, this is relatively flat and very healthy trading, which just shows that AMC was ready to move out of this range back from $32 to $36 and now into $38. And this is what we've been talking about for weeks now, guys. We are going to start that slow and steady grind up. And of course, for you new apes, or new to this channel apes rather, you guys will see exactly what I'm talking about when we start comparing early to late May to where we're at right now. All in all, the biggest thing is we did close the day right above that level of 38.09, and we had that last, 10 minutes of the day, we did have that push up right above that. So that is really great. So, of course, as Friday typically goes, it usually is a somewhat slow, flat day, and that's because a lot of traders sign off early on Fridays. Cannot blame them, totally fine. But, of course, we'll see what happens because some Fridays can be green. We'll go over some key levels when we jump into some of the other charts. And actually, we'll just hop back over here and go over the TA that we've been looking at. So just bear with me for a second to line this up for you folks. All right, so what we have here, for of course you new apes to the channel, we do have the Fibonacci retracement from $8.31 on 4/12 all the way to the high of this run, which was on 4/27 at $12.22. And we'll zoom in to make that nice and pretty for you folks. And of course, what we have recently here, of course you guys know that we did come down and touch a low of just about $28.91. From there, we did have the recent high of $52.79 and have since retraced. And apologies for my poor internet. I do have to do some driver updates after this video, but I just want to get this information out in front of you guys before that. Anyways, what we have setting up here is exactly similar to this area over here, right about at the beginning of May. And this slow grind up is exactly what we are about to witness. So we did have this recent decline in price action, but we came down to this area right here that we did call out right at just about $36 to $35, and cents have started the run back up. And this slow and steady grind is what I expect to see over the course of the next couple of trading days, getting us back into the $40 range. But of course, as you guys can tell from this, it was very choppy, and that's exactly what we're going to be seeing as we approach early next week. So the big thing that I was watching on this chart today, we'll actually just hop over here and go right to the 1 hour chart. The big things that I was watching today, and we'll get the price levels here. Sorry about that, guys. My charts are a little bit of a mess. Was a few things. So, of course, we did break out of this descending level here that went on for literally weeks. Once we did break out, we did have some nice price action, touching very slightly above that 50% retracement level at $40.90, but cents have fell into this wedge-shaped pattern. Now, as of today, we did have that nice bounce off of this range and then broke out of this descending wedge level. And that is really what brought us back into this range of 61.8 on the retracement. So this is looking really good. Now, where do I think we go from here? Well, like I said before, it's going to be choppy moving up and back into $40 range. And especially when a key level for shorts is right around $37, $38. If we look at the days to expiration or the days to cover on Ortex, we can see that our evidence is highly suggesting that shorts probably got into their positions right around $37. So that's why there's some heavy, you can say manipulation, you can say price action, whatever it is. But at the end of the day, it's just going to be a little bit of a struggle to move out of this range. But if we do jump back and look over here, look what happened. Once we broke out of that 50% retracement level, boom, we were off to the races and broke past that recent high. So that would be that $52.79. Breaking past that, this is what ultimately led to that massive run-up that we saw on June 2nd. So it's not going to happen this week. It's not going to happen next week. But this is going to take time to play out, and this is the exact thing that I'm looking at. And really the big thing, too, I just want to throw in the major indexes here, the S&P 500 and the triple Qs, the NASDAQ. They did have kind of a rocky day. So the interesting thing is AMC has been moving with the broader markets, which is really why we do have to keep an eye on what's going on in these indexes. Totally fine and totally normal. Anyways, the SPY, triple Qs, almost exactly same patterns. And of course, we are still on the 1 hour chart. So that's really my biggest and favorite time zone to be watching. We had that gap up in the morning, but came up to our resistance on the SPY at 441 and on the triple Qs 365. And interesting enough, got rejected off of that resistance level. Now, the big thing, and we'll jump into it actually right now because this is a perfect segue, is the default in the debt ceiling. So the biggest thing why I personally believe the markets, the overall markets, were taking a beating was because of the fear, uncertainty, and doubt, of course the FUD, of what's going to happen if we default on our debt. Well, of course it's going to be bad. We're already in an over-leveraged and explosive market, you can argue. So a lot of people were getting worried, some people selling off, a lot of people taking put positions on the triple Qs and the SPY. But today, we kicked the can yet again, and I swear to God, the Fed, the market makers, the banks, they are professionals at can kicking. All this is they're going to put out, I believe it's $480 billion onto the Treasury account balance to get us essentially all the way to December 3rd. So, of course, this doesn't relieve the entire issue itself, but all it does is it buys Congress a little bit more time to decide on what the hell they're going to do. Are they going to suspend the debt ceiling? Are they going to push it yet again? Or are we just going to go ahead and default and have a catastrophic fallout within our overall markets? So now they have a little bit of time. But really, once this was passed, this article comes through at just about 12:04 a.m., very early in the morning. So I really thought that markets were going to be booming today, which they did, but not like I thought they were going to do. Besides for that open in the morning, we almost started very close to where we opened for the day. I mean, the triple Qs were up 0.92% and the SPY up 0.86%. So we're green on the day, but Nothing massive like I thought was going to happen, and especially after we did have a pretty serious correction. I mean, look at the triple Qs. Started at 454, now we're hit a low of 426. It was a pretty decent sell-off. But of course, if you look overall, these major indexes are well off their lows of the year and still abnormally making some severe gains in the market. So we'll continue to watch this and see what's going on. Of course, one of my favorite tools as of lately has been Unusual Whales. This is just absolutely incredible, guys. It goes over all the options flow on the call side, on the put side, with different filters that you can put in to find exactly what you're looking for. Now, the big thing for AMC that I've been noticing through this is, if you look back at some of the older data coming out early, mid, late May, the options data was actually never extremely bullish at that moment. It was split relatively flat, 50-50 on each side, which is exactly where we're sitting now. The day that the option flow got incredibly heavy was right before that June 2nd run-up. So that's exactly why we're not seeing anything crazy here. But the biggest thing that I'm seeing is a lot of puts being sold. And if you guys don't know, selling a put is very bullish because you're out of that position and you are saying that possibly the low is in. And especially right now, we do have premium set to over 50,000, which is pretty decent sized whales, you could argue. So seeing that information is really good to see. Of course, we'll take a quick look into the all-in-all for bullish versus bearish here. And pretty much the same as yesterday, 50.7% bullish, 49.3% bearish. So exactly what we saw back in early, late May. And of course, once this does flip to extremely bullish, that's when we know that AMC is going to have a pretty nice breakout. Now, anyways, to end the video, I do want to just take a quick look at Ortex. Nothing too crazy for the day. The big thing is short interest has been continuing to go up. We are currently sitting at a short interest of free float at 21.02%, and that is very close to the highest. As we can see in these trends, we've been floating around this high area for the current short interest. And of course, 21.2% sounds very high, which it is very true. This is one of the higher levels that AMC has seen in quite some time. But the biggest thing is this data is not accurately representing the actual number of shorts out there in the market. Now, we're seeing 21.02, but this could easily, and I can't confirm this, so I do have to say this is speculation, but this could easily be well over 40% because of all the synthetic bullshit and all that stuff that goes on in the markets, guys. I mean, it's clear as day that that stuff is going on. You literally cannot argue that right now. But anyways, guys, things are looking great for AMC as always. We're at a very key level, and now we are starting that slow grind up into this level of $40, and I would love to see 40 at AMC yet again. But guys, it's going to take time. Stay patient. Ignore the FUD. Ignore the bullshit. Stay away from the drama. Just do the DD. That's it, guys. Anyways, thanks for joining me today. Be sure to hit that like button and subscribe for more content. Peace.